Welcome, I will be your instructor for this module on budgeting. The objectives of this lecture is to firstly help the learner understand the differences between budget and budgeting. Secondly, to introduce the basic concepts of accounting such as bookkeeping, journal, ledger, etc. Thirdly, to orient the learner to the practice of summary of accounts in social welfare agencies. Fourthly, to facilitate in the basic understanding of the important concepts in budgeting techniques and types. Finally, to help the learner understand the basic steps in budgeting. What is budget? Budget is a statement of financial results expected in the future. Now, what is budgeting? Budgeting is the process of preparing a detailed statement for financial results that are likely to happen in a period of time to come. Budgeting is useful as it helps in segregation of activities and making provision for the funds. It helps to choose the best option. It helps to find out areas in which cost reduction can be done. Thus, budgeting can be defined as the process of setting financial goals, forecasting future financial resources and needs, monitoring and controlling the income and expenditure. The important concepts of budgeting are budgets, operational plans, cost estimation and income generation. Before we move to the budgeting techniques and steps, let's try to brush up on the basic accounting concepts. Basically, there are many concepts in accounting and many types in accounting. We will be discussing about some of the basic concepts such as accounting, bookkeeping, journal, ledger, cash book, financial statement, income and expenditure statement, balance sheet and analysis of financial statements. We will start with accounting. Accounting is a system of recording of business transactions that create financial information about the organization to facilitate decision making. According to the American Institute of Certified Public Accountants, accounting is the art of recording, classifying, summarizing, analyzing and interpreting the transactions and communicating the results to the interested users. Second is bookkeeping. Each and every organization will have many monetary transactions every day, but it is hard to remember all this transaction in every respect. Hence, it becomes important to record these transactions in detail and in a systematic manner. This process of recording of transactions in a systematic manner in the book of accounts is called bookkeeping. The next concept is journal. Journal is a book of accounts in which all day-to-day business transactions are recorded in a chronological order and in the order of their occurrences. Transactions, when recorded in a journal, are called as entries. Journal is also known as the book of original records, or it is also called the primary entry. Next is ledger. All the accounts identified on the basis of transactions recorded in different journals, such as cash book, will be opened and maintained in a separate book called ledger. Ledger is a book of accounts in which all type of accounts relating to assets, liabilities, capital, expenses and revenue are maintained. It is therefore a complete set of accounts. Next is cash book. Cash book is a book in which all cash receipts and cash payments are recorded. It starts with the cash or bank balance at the beginning of the period. There are different types of cash book, namely symbol cash book, bank columns, cash book and petty cash book. Next is financial statement. Financial statements are statements that are prepared at the end of the accounting period. Financial statements are prepared by NGOs in the form of receipt and payment account, income and expenditure account and balance sheet. Next is income and expenditure account. Income and expenditure account is the summary of income and expenditure of an organization of a particular year, and it is prepared at the end of the year. In this account, revenue expenditure and revenue income of the year for which the income and expenditure account is prepared are taken into consideration. The balance amount of this account is either surplus or deficit. If the income side of this account exceeds the expenditure side, the difference is a surplus. In case of expenditure side exceeds the income side, the difference is deficit. Next is balance sheet. The objective of preparing a balance sheet is to show the financial stability, strength and soundness on the last day of the accounting year. The balance sheet has two sides, namely asset side and liability side. Opening balance sheet is required to prepare the balance sheet of the current year. The balance sheet is one of the most important financial statements. Finally, financial analysis of the financial statement is very important. Financial analysis is the art of interpretation of the financial statements. It refers to the way of establishing meaningful relationship between the income statement and the balance sheet. Analysis of financial statement is an attempt to assess the efficiency and performance of an organization. Now that we are clear, let's move on to an important part of this lecture. This is all about receipts and payment account in welfare organizations. The summary of accounts, which is prepared in most of the social welfare agencies or NGOs, is the receipt and payment account. The basic book of accounts maintained by the social welfare agency or an NGO is the cash book. It deals with the cash transaction on day-to-day basis. But at the end of the financial year, the social welfare agency or the NGO is supposed to prepare a summary statement. The most commonly prepared summary of accounts is the receipts and payment account. In this summary, all receipts are recorded on the debit side while all payments are shown on the credit side. Some of the concepts which are commonly recurring in the receipts and payment account are assets, consumable items, honorarium, donation, subscription, endowment, legacy. Honorarium is the remuneration paid to the management such as to the general secretary and to the president. Donation is the money received as gift. Subscription is the regular payment made by the members annually. Endowment is a fund for permanent means of support to the organization. This is usually established in memory of significant people or in the memory of loved ones. Legacy is the will of property or something left by a deceased person. Fixed asset refers to the books, buildings or any other item which is purchased in the name of the organization. Consumable items refers to any stationery goods. Now we move on to our main part of the lecture, which is on budget and budgeting techniques. There are three main types of budget, namely income and expenditure budget, capital budget and cash flow forecast. The income and expenditure budget sets out the anticipated running cost of the organization and shows where the funds will come from to cover the costs. A capital budget lists the expenditure intended for the coming years on capital equipments. Cash flow forecast predicts the flow of cash in and out of the organization throughout the year by breaking down the overall budget into small period of time. There are two main budgeting techniques, namely incremental budgeting and zero-based budgeting. In incremental budgeting, the current year's budget is based on previous year's actual budget or sometimes the budgeted figures of the previous year. Zero-based budget ignores the previous experiences and starts with next year's target and activities. But in zero-based budget, the writer of the budget should justify all the resources which are required. It is up to the organization to choose between zero-based budget and incremental budget. Now we move on to the steps in budgeting. There are 4 steps in budgeting. They are selecting the budget committee in the organization, setting the budget priorities in the organization, presenting the budget, and monitoring the budget. First is selecting the budget committee. The budget committee of an organization is an important committee. The persons who serve on this committee should have qualities such as familiarity with budgeting and accounting process, information on the strategic plan of the organization, and should have holistic perspective rather than lobbying for a particular project or a particular idea. The steps in developing the projects are firstly to define a budget timeline, to estimate the cost and resources required to achieve each and every objective. Thirdly, establishing and estimating the expected dates and amount of revenue that will be generated. Fourthly, comparing the expected dates and amount of revenue to the expected and estimated expenses. Developing the final budget and then presenting the budget for approval. Third stage is setting budget priorities. The budget committee has to examine the sources of revenue, the method of securing the funds, and the time period for achieving those needs. This period is called budget priority setting time. The next stage is budget presentation. Usually, the chairperson of the budget committee presents the budget before the board. The budget will be discussed in the board and final approval will be given after modification of the budget based on the comments of the board. Finally, the budget has to be monitored. After the budget is approved, finances will be available. But constant monitoring of the budget is an important factor for better performance of the organization. Several financial control mechanisms can be adopted for making the budget more effective. Now we will look at the budgets for social welfare projects. The budgets attached to project proposal present the program in financial terms to the donor. It reflects the plan and how the resources will be allocated for implementing the plan. While preparing budget, it is important to clearly state the goals and measurable objectives. Some of the points can be kept in mind while you apply for funds. Firstly, do not exceed the fund limit specified by the donor. Secondly, clearly justify the need for the money. You can consult a financial expert for reviewing your budget. Thirdly, you should make the budget reasonable and identify the organizational commitment for the match or in kind or any other grant. Show that the project is sustainable after the project period. Some more tips can be that before preparing the original budget, a shadow budget can be prepared. This helps in clarifying that what one wants from the budget and how it can be accomplished. Secondly, in recent times, the idea of participatory budget is evolving, wherein the field level staff will also involve in developing the budget proposal, which will help in developing it more realistically, both in terms of financial and in implementation levels. We have reached the end of this lecture. Let's do a small recap. The receipts and payment account is an important summary of accounts for social welfare organizations. We learned that there are 3 types of budget. They are income and expenditure budget, capital budget, and cash flow forecast. We also learned about the 2 types of budgeting techniques. They are incremental budgeting and zero-based budgeting. We also learned that there are 4 major steps in budgeting, which includes selecting the budget committee, setting the budget priorities, presenting the budget, and monitoring the budget. Hope you enjoyed this lecture. Thanks for attending this module.